and welcome to Global Business, CCTV's new program with insights into Africa's ever-changing business landscape. From Nairobi to Johannesburg, Lagos to Cairo, from small businesses to large-scale corporates, we take you directly to the entrepreneurs making the headlines. I'm G2 Abraham, here in the Kenyan capital of Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C., and 2 a.m. in Beijing. Wherever you're joining us from, welcome. U.S. car maker General Motors suspends production in South Africa as the worker strike takes hold. And tobacco farmers in Africa feel sidelined on plans to regulate the crop's production. And we tell you how one phone application has transformed taxi operations in Kenya. We begin in South Africa, where General Motors has suspended production of its main South African plant after industrial action hit its parts supplies department. Violence erupted in some of the picket lines as the wage strikes by NUMSA dealt another blow to the economy. GM's suspension of output at its plant in the coastal city of Port Elizabeth showed just how impactful this walkout has been. This is after the union rejected increased wage offers from the Steel and Engineering Industry Federation of South Africa. The latest industrial action will possibly cost the economy more than $28 million a day in lost output. This is as South Africa just started to recover from the platinum strike that lasted 5 months. Earlier, I got a chance to talk to Miriam Bernard in London for her analysis on General Motors' decision to suspend production due to the strikes this week, and for her take on how businesses are now viewing South Africa as an investment destination. I also was able to ask her how these new strikes are affecting the country's image.
Well, G2, investors are very frustrated, and this is yet another blow of uncertainty over South Africa's labor market. Some analysts are saying that the 5-month strike of more than 70,000 platinum miners very much opened the gate for more wage debate, very much in return making South Africa less attractive. Now, the saving grace is that many investors who look at this market are still on a hunt for that great yield and a broader picture of course, rising growth in the region. In fact, experts say that until now, the risks of investing in countries with labor unrest and weak infrastructure have been overlooked by many mainstream investors. But this is very much a twofold problem for GM. We have to remember that after it was forced to issue a series of vehicle recalls in the U.S., as you know, the production suspension is also very damaging for the company. But investors are worried this latest strike will only escalate more wage debate as the union rejected the new wage offer from the Steel and Engineering Industry Federation of South Africa.
All right, in regards to output now, how are the strikes expected to impact GM's productions, and could we see cuts to its labor force?
Well, at this point, there's been no official word on restructuring operations, but some analysts are saying the U.S. giant is under pressure to close down its local operations. In fact, 2014 has been a disaster year for GM as a whole. Its stock price is down nearly 13% this year, and with a recall that will cost the company more than $1.7 billion U.S. just lurking over its head, the common expectation is that the company will look to downsize its other international operations to offset the losses. But in the bigger picture, South Africa's labor market is feeling the impact in a series of sectors, including, of course, steel producers, construction companies, and, of course, automotive suppliers as well.
We're fresh off the heels of the AMCU strike. Can you tell us, are international businesses now watching the South African government and its involvement in the latest strike?
Well, it's a major crutch for South Africa right now. It's trying to avoid another long-standing strike. While GM said it stopped production, other car makers like Toyota and BMW said they have enough stockpile of parts like tires to maintain production for a few weeks. So they're very much looking to see what the government will do and what role the government will play. But critics say that when it comes to production, some businesses are reconsidering South Africa as a destination to set up. On the investment front, though, private equity firms like Carlyle Group have poured more than $2 billion into South Africa and other top African markets. while global funds struggle to find those deals that are worth more than $100 million. Most private equity deals in Africa remain quite small, below that 10 million mark. The upside is, though, the potential for higher returns than other markets. So that's where we're still seeing a lot of growth. But certainly businesses, international businesses, are waiting to see if the government takes a more active role this time around.
That was Miriam Bamard in London for us. Now joining us for a local perspective is Sumitra Naidu, who's live for us in Johannesburg. Sumitra, we'll have to ask you one of those same questions. What are the reactions on the ground to the idea that these strikes could impact GM's production output, possibly then causing cuts to the labor force?
Well, G2, I think it's becoming a reality more than just an idea. General Motors closing its plant temporarily today because it can't access component parts to make its vehicles. The car maker did make contingency plans and says it has enough cars to sell over the next 2 weeks, but no one knows how long the strike will go on for. Last year, we heard BMW announcing that it was cancelling all plans to expand in South Africa, and this was because of ongoing disruptions due to strike action. Now, this was a lost opportunity to create jobs, much needed jobs. Unemployment still very high in South Africa, and many economists are warning that it's inevitable. The sector in particular is already taking strain and will shed further jobs.
Moody's is warning that the strikes could not only threaten economic growth, but could hinder the government's ability to rein in debts. This would ultimately be pushing the country's credit rating to junk status. Now, what's the reaction to this on your end?
That's right. Moody's has had a negative outlook on South Africa's credit rating since November 2011, and it's now warning that it may have to issue a downgrade in light of what's happening here. The ratings agency raised its concerns about worrying signs that South Africa will be unable to pay back its debt. The agency says the ongoing labor strife is making it difficult for South Africa to take advantage of a recovery in growth in its main trading partners like Europe and would trade with China. The economy is struggling and is unlikely to achieve its growth target of 2.7% this year. Last month, Fitch lowered its outlook on South Africa, and Standard & Poor's downgraded the country's long-term foreign currency rating. And it's not only the strike. Eskom is struggling to keep the lights on in South Africa, which is hurting business and the economy at large. I'm afraid it's just not looking good. And of course, economists reacting to that and say that they're saying that it's very likely another downgrade is on the way.
Oh, it's quite unfortunate. Thank you. That's Sumitra Naidu joining us live from Johannesburg. Now, Africa Exchange Holdings has officially introduced the East Africa Exchange at the 6th Northern Corridor Integration Project Summit being held in Kigali, Rwanda. The EAX is a commodity exchange that aims to increase regional market efficiency and give the growing population, particularly smallholder farmers, better access to commercial markets. The exchange will link small-scale farmers in East African communities to agricultural and financial markets. Now, this will help the competitive pricing for crops and better access to finance. EAX will use NASDAQ's OMX Extreme Trading platform for electronic trading and warehouse receipts. This will be done so farmers can deposit their produce into EAX certified warehouses while accessing its services.
To be a fully regional exchange, we are opening EAX to regional investors so we can become an East African-owned exchange. From the inception, we have welcomed public-private partnerships and encouraged both public and private investment from the region. As a further step, within 1 month, we will present a business case for East African public and private shareholding in EAX to be further considered by this forward-thinking body. We are eager to work together with the East African governments through PPPs or as shareholding partners to build the exchange.
All right, joining us now for an update on the 6th Northern Corridor Integration Project Summit being held there in Kigali, Rwanda is Peter Wakaba. Peter, what benefits could East Africa see from a commodities exchange?
Well, due to quite a myriad possibilities once that exchange is really up and running, mainly because first off, most of East Africa's farmers are what are considered peasant farmers with no access to market, no means of pricing their crops and products themselves, and thereby reaping very little in terms of benefit from that. Now, the exchange is going to turn all these on its head. The first thing, of course, it does is enable farmers consolidate their product at a level that enables them be able to have some bargaining power. This is done through the warehousing receipt system, which enables farmers deliver their crops and products to a warehouse and get a piece of paper in return, which they can then take to a bank for credit, or even take it back to, well, an agrovet or someplace like that to be able to access next season's planting.
All right, Peter, what can we expect in the future from this organization, and then are there any success stories out there?
Well, with commodity exchanges, the sky is the limit, G2. Just to give you a case in point, now Africa's richest, indeed Africa's largest companies started off selling grain and commodities. The Dangotes of this world started off milling grain, the Bakresas, who have companies right across Eastern Africa, milling grain and selling it to the masses and dealing in commodities. What the exchange can do is that it can put some of this bargaining power back in the hands of the farmers themselves, enable them uplift their livelihoods by basically enabling them and have better incomes. One of the things that we can say is driving this forward is the fact that there are exchanges like the coffee exchange in Ethiopia, which have charted a way forward for companies in the past and actually had a very positive impact on the lives of farmers. And of course, we can say that this is what the East African governments are trying to do.
All right, thank you. That's Peter Wakaba live for us in Kigali, Rwanda. Now let's take a look at the markets that we track here for you to see how they're ending the day. Looking at the NSE, the Kenyan shilling eased a touch on Thursday due to a slight increase in dollar demand. Now this is amid higher liquidity in the money markets. Coming up on Global Business, we hear from tobacco farmers in Africa who feel sidelined on plans to regulate the crop's production.
We don't know what they're going to propose. They want to regulate tobacco farmers, they want to reduce the production of tobacco.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
Zambia is a hidden gem, soon to make its shining debut on the global tourist circuit. It successfully hosted the UN World Tourism General Assembly in 2013 and is expecting the exposure to shoot their previously slow-growing tourist earning numbers far beyond the 2010 mark of $148 million. Welcome back. You're watching Global Business. Now, tobacco farmers from Malawi, Zambia, Kenya, Mozambique, South Africa, Uganda, and Zimbabwe are all concerned that they're being excluded from deliberations and consultations at the COP6 Framework Convention on Tobacco Control. Now, among the measures being proposed, the reduction of crop production. In tonight's What's Hot segment, Angela Coppola talks to the global president of the International Tobacco Growers Association, Francois van der Merwe.
There's no question that smoking is bad for your health. However, there's a whole group in the value chain that produces tobacco crops, and they're being excluded from a very important conversation that's going to be happening in Moscow.
We are 3 months away from COP, and we don't know what they're going to propose. They want to regulate tobacco farmers, they want to reduce the production of tobacco. At COP5 they proposed extreme measures, and because our biggest concern is that they have not consulted with us. You cannot regulate 30 million people around the world without consulting with them.
You raise an interesting question about viability and sustainability. Is there an alternative to tobacco as a cash crop?
The interesting thing is that most tobacco farmers in Africa are diversified farmers. More than 80% of the world's tobacco is produced by smallholders, small-scale sustainable farmers. They all have a little bit of tobacco and then some food crops around that. So farmers are businessmen. They produce what they think can work for them.
Okay, now we've got COP6 in Moscow a couple of months away, as you said. What are you going to be doing? Are you going to be attending? And if so, how do you engage with the WHO, for example?
So we can only engage through our governments. So this is what we did in Harare now. We had the Harare government there. We have a campaign plan running up to COP for our growers, leaders in our various countries in Africa to engage with their governments and to ensure that their governments have a country position which supports tobacco growing, because tobacco growing is important in Africa, nobody can deny that, and that governments go to Moscow with balanced delegations. The big problem with tobacco is not the regulation, but the fact that it is dominated, hijacked and managed by health ministries. Tobacco is more than health. We need delegations to include agricultural ministries, trade ministries, finance ministries, as well as health ministries.
Now, you mentioned the Zimbabwean government being involved and being part of your discussions that you just had this week. What about the other countries that are involved in Africa? Are they sympathetic to the plight of their tobacco industries?
Countries like South Africa, Kenya, Uganda, Tanzania, Zambia have ratified the FCTC, so they can be inside and they can actually have a vote. Unfortunately, we have extreme countries with extreme anti-tobacco voices in Africa. For example, South Africa, Kenya, Uganda. They are extreme and they talk against tobacco, although the tobacco industry brings a lot of wealth to those very countries.
Tobacco is a huge industry on the African continent, and those countries that produce tobacco products for export are generating huge amounts of foreign capital, and yet they're being excluded from a very important health conversation. I'm Angelo Coppola for CCTV in Johannesburg.
Look now at commodity prices for the day. Brent futures held steady on Friday on signs of an improving demand outlook. This is although the benchmark is still set to post its biggest weekly loss since early January, as supply worries that have rattled the oil markets for weeks start to recede. And when we return, we tell you how one phone application has transformed taxi operations right here in Kenya.
BizAsia. Asia means business.
Welcome back. You're watching Global Business. Now, we turn our attention to what is being reported on the African press. The Al Haram in Egypt says the North African country and Ethiopia have agreed to boost mutual relations, quoting the former director of the Arab African Research Center as saying that the partnership will be focused on mutual interest and mutual benefits collectively for the two countries. In West Africa, the Nigerian Guard reports that the United States Justice Department has put some Nigerian banks under the searchlight in the wake of growing terrorism in the country. The banks are specifically being investigated to establish their links, if any, with the funding of various terrorist organizations across the continent, and are particularly looking for Boko Haram. And finally, in Kenya, the Business Daily reports that the United States has overtaken China to become Kenya's second largest source of imports. The value of U.S. exports to Kenya rose to about $335 million in May, and this is compared to China, which comes in at $235 million. Now, America also rose to become the largest consumer of Kenyan exports during the same month, overtaking Uganda, which has held the top spot for the past 6 years. Kenya's middle class is growing, with many opting to take taxis from one point to the other. Now, this is as governments begin to push to restrict transportation providers to a strictly cashless payment system. But one company is already ahead of the game. And in tonight's grassroots segment, we take a look at Sasa Cabs. It's a Kenyan-owned company that gives consumers a way of getting cheaper, more reliable cabs through mobile or online applications.
My co-founder, Daniel Norberg, and I, last Christmas, just felt that there was a serious lack of availability of our personal taxi drivers. So we thought to ourselves, why not create one marketing umbrella and one booking platform for all independent taxis in Nairobi? And so from that idea then, we expanded it, and we basically said, let us just create a product that makes it easier for customers to get taxis, but also to get the cheapest and most reliable taxis. So the way that Sasa Cab system works today is that when our customers call us, or we have a smartphone app as well, or use the website to book a taxi, we send an SMS out to all the taxis registered closest to the pickup location. They then just reply with an SMS, and that's very important because it's an SMS-based system. It doesn't require a smartphone, it makes it more accessible to a larger pool of taxi drivers. And then they reply, and the customer, our system, chooses the cheapest and fastest quote of all the ones that we receive and pass it on to the customer. The information is then exchanged, so the taxi driver receives the customer information and the customer receives the taxi information. We're currently in the process of registering taxis. We have 150 plus right now, and the registration process is ongoing. But this already has given us sufficient coverage across Nairobi and a sufficient density of taxis in all the most important areas to provide the customer with precisely that, the cheapest quote. But essentially, we have the umbrella aims to have every single taxi in Nairobi under this one umbrella in order to also have a most efficient kind of auction process and also to guarantee that our customers are actually getting the cheapest possible taxi ride in Nairobi for that particular, destination. We cannot risk making this giant leap forward, for example, just being reliant on smartphones, because doing that we risk excluding a large part of the market. So we think that it is possible to be innovative and have innovative platforms that really solve problems of the customers in Nairobi, but at the same time we have a software platform that is accessible to all, and that's why we always focus on an SMS-based auction system rather than being heavily reliant on smartphone applications, although we do also have that aspect to our business as well. Well, I think for the time being, we're going to focus on taxis, and we want to aim to get this product class done properly. But following that, we do look to expand it to different vehicle classes because our software allows different vehicle classes, and because the Nairobi market also demands that. We will also then start introducing boda-bodas, motorcycle taxis for people that are not aware, aware of the term, the Kenyan term for that. Pickup trucks, delivery vans, any type of vehicle class we aim to have, as well as also expanding first within Kenya, then regionally as well.
Now look now at how your money is trading. Let's move south to South Africa's rand, which reversed early losses against the dollar on Wednesday, although it still remains vulnerable to negative investor sentiment in the face of the ongoing wage strike. That's it for this edition of Global Business. Remember, you can send us your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I'm G2 Abraham. Thanks for watching Global Business, and be sure to stay tuned with us for more next week.